The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman on this Tuesday, December the 20th, and what we're looking at is that the Dow is up 88 at 32,844. So there are a couple of things that are really important. Let's just go through. First of all, on the left is the daily chart, in the middle is the weekly, on the right is the monthly. You can see where we snapped out of that resistance, Chapman wave falling axe formation. There's an inside track repellent zone, which became a support level. Now it's become a really important support level, this gray line right here, which matches very much the weekly chart, because going from the high that was made early in January, the all-time high at 36,952 on the 5th of January, the week of the 5th of January, I believe it was on the 5th. What we're looking at is we've come back and look at the multi-series of moving averages and the Chapman wave inside track, all these different things that are key support, going to about 32,200 on the weekly chart. But on the very short-term chart, where I said to subscribers to my opening call, is one of the reasons why we want to just nibble on the long side of the Dow, and we'll see what happens if we have a rally towards the pink 9-period moving average of 33,300. That's a 500. That's a lot of points to go when you've been down so sharply. But if there is, then we've got to decide, is it going to be one of those patterns that I call the, let me just get this right here so you know what I'm talking about. Okay, good. We're going to be going right there. Uh-oh, did I lose that? I don't believe it. All right, I'll be back in a moment for this particular pattern, because it would be the H pattern where it fails and it comes back and takes out the left side low. But within that context, it's even more important that we go right now. We go to George in Newport. Hi, George. How are you? Oops. Was that George just hung up? Whoops. Let's just see if George can go. George, can you come back? I think you want to talk about the UNG. And yes, so let me go through the UNG in any case. And as soon as you get back, if you are going to be able to call back, just say, I'm here. Just talk right over my voice. I'll hear you, and that'll be good. UNG is trading right now down sharply at 16.73. What is the UNG? The UNG is the United States Natural Gas Fund. So it's not called an ETF because it's natural gas and there aren't a number of stocks. So it's really in the futures market. So it's called a fund. And that fund went to a peak D in the Chapman wave. The fourth highest peak is where you got to be real careful. We went to that fourth highest peak back in February, I think it was. No, let me just check if that's correct. That wasn't right. That was more recent. It was just, in August. In August. At 24.61, there's a continuous contract. So I wonder if that price has changed. Let me just check. 24.63. Yeah, it's changed by 2 pennies. Back on the 23rd of November, it was a peak D in the daily. No. That was the one over here. That was just the one in November. Yeah. Anyway, it made that peak D in a left side, right side price time match. Actually, it was 2 days before that equal number of bars on the left to the number of bars on the right. And then it dropped sharply to 16.30 on the 7th of December. Then it ran up in a single leg A. Doji candle started to fail and then curved all the way back. So maybe you're not able to call George, and I'm not sure whether you are long, short, looking to go in, but I'm going to do this. One of the aspects that's really important so this is the daily chart on the left, made an H, and I drew in the chance that there could be a bounce, and maybe it even makes another little arch formation, which means the lowercase h goes to a lowercase m if it's successful without hitting 1629, or at least, let me see what the price would be today. 1630, yep, 1629. A penny below says it negated any chance of that H pattern being successful. It's called unsuccessful. Not that it can't go up, but what's most important is look at the weekly chart. One of the reasons why I said we're treating it as a trade when we got in for that leg D, and since then we've kind of stepped aside. We're looking at the chance that natural gas in a seasonally, as far as I can recall, looking at different charts of the season. I haven't got that in front of me. But this is where it should start to rally. Actually, September to October is when it rallies, and then there's some kind of a dip going into early December, and then it starts to rally. That's to my memory. But more importantly, this is a time where natural gas, under every other circumstances, should not be making lower lows. It should be, in fact, up in at least the mid-range, in the 22 to 23 area, not at 16.78. So if you were considering to get into UNG as a long, I would suggest to you that, and one of the things that I've discussed is that the only way I would treat it as anything other than a trade, first of all, if it held to beautifully today in the 1670s, I don't care what the low is, 1666 so far, but I would like to see it close not down $1.23, but maybe down 36 cents. And then tomorrow, I don't care what the reason is, it suddenly spikes up over $1. At that point, I say, okay, now we've got the chance of a lowercase h, and now I need to find that chart. Let me see if I can get it. Have I lost it? No way. Oh, there it is. Good. Patterns I look at, straight line up, straight line down, cup formation, arch formation, a mix of 1 and 2 and 1 and 3. Happens all the time in the market. And what do we have? We have straight down. There's just, let me go there. Look, there's just straight down. Then it makes an arch formation. And in this case, it hasn't gone to the left side low yet. It's already down at 1630 is the number to look at today. So 1666, it's close. But if it holds here, then it can have a bounce. And then this H goes to a lowercase m. If the lowercase m, if it has not taken out the left side low, even on not just a closing basis, even intraday, but it holds above that and then makes a rally. That rally can go above the arch high, especially if it's only gone to a peak A or a B and then come down. Then what happens is if it closes above that arch, it can go quite a lot higher. It can go maybe to a moving average above that. Maybe it can go to a gap or a candle, whatever it is. You'll have icons to the upside that you can look at. But at this particular point, it's a work in process and progress, hopefully progress, and you have to wait. And one of the reasons why I say wait is in this time frame, I would expect under normal conditions, let's just have a look. Yeah, let me just show you this. Let's go to the weekly chart rather than the monthly. You can see it much better. Look, the weekly chart, last year, October made a high of 22.10. December the 27th, the week of the 27th, made a low and started rallying. So, and let's go back even further. Let's go back to 2020. October, it made its high. Look, September, the week of the 20th of September, it made its high. At that point, it was 23.40. It pulls back, has a bounce, tries to retest, it fails. That's the upside down dreaded H, like the reverse Y pattern. At 22.81, the week of the 8th of November, pulls back. Oh, that is interesting. And then it slumps all the way into July. Well, so much for that theory about the cycle. All I can say is it's acting really poorly. I don't think I would want to be long this. I'd actually take it off. I've taken it for my subscribers. I'm just taking it off the radar right now. I just think it's too risky. It's an overnight risk as well. I'm just holding. If it closes under $16 in the next couple of days, it's on its way to even lower lows. I'll be back. Basil Chapman, Dow's up 88. He'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open. to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, so we're back and the Dow's up 70, S&P is up 4.5. This is a real struggle, but meantime we're trying to form some kind of a base here from which at least a bounce can happen, and that bounce is going to be the test of whether we look at the vertical left side, right side, price time match. Actually talking about that, let me just show you this right now. Here's the E-mini. Beautiful, beautiful turnaround here. There was a very unusual pattern which happens at 8:30 or 9:30 in the morning at the open of the market. Sometimes you can get an aberration. You get what I call the Eiffel Tower spike up and then it fails. That's one of the few times in the Chapman methodology where it's actually a failure pattern, where you've gone to not a D, but you've gone to an A or a B and you've turned down. That's exactly what happened here. And then at about 9:50, you started this big move up. You see the 9 across the 14 period, how beautiful that was. And now what I wanted to show you is the measured vertical analysis, where the MACD was very strong, stochastic was very strong at the rally that occurred with this tiny doji candle right here at 10:07. This is the E-mini 1-minute chart. Pulls back, just nicks the 14-period moving average. The 9 is still very strong above the 14. MACD's weak, stochastic's weak. On the retest, it makes a V-shaped pattern. And what happens at that level, you'll see, I'll draw this in here just to show you, this is going to be the test of now do we see inner strength, and that every pullback now is treated as a buying opportunity, or are we still in this area that says every rally, just sell the rally? This is a big test, because at this particular point, the technicals are suggesting just the 9 over the 14 is positive. The MACD is weak, stochastic is at 82%. I'm not complaining, that's good, but it's weaker than it was before. So it says start to look at this as more like a rectangle formation. Right, I even go back a little bit to say, just use the outer levels and you can see it visually very nicely. There's the level that we're looking at, and it means that even if there's a rally above, this has to become the containment area. So that's what I'm looking at. It's just a 1-minute chart. You got a big spike that's sold exactly where? At the 200-period exponential moving average. How many times do I talk about that? The closer you get, eventually, when it just is so close that the magnet of the line kicks in, it just grabs the price. But then what happens is, if the price doesn't, this is a 10-minute chart, doesn't have the oomph, doesn't have the power, doesn't have the momentum, has the torque initially, but it needs to have the follow-through momentum to push above that, to make it a propellant rather than a magnet line. That's going to be important. So for the next little while, we're watching this 10-minute chart at 38.51, the 200-period moving, the 200-period moving average of the 10-minute chart. Just watching that closely. The higher we go, the better it is. And I think we are so oversold on a near-term situation that we should be pushing high. One of the reasons why we added back to some of the positions, a little position we added back in the diamonds, because we took off some of it on the way up because we got in at just about the low, and now we try to. I think that there's a chance that a chunk of this move down has been made just for this particular period, and now we continue. So a couple of questions came in. ExxonMobil. Yes, acting well. It's up $1.60 at 106.77. In fact, now this is exactly the pattern I was talking about. It went down to the Chapman wave inside wedge target support line. That's the X that I put in that I thought would be a target, 99 to 98. It didn't get there. It went to 102, and then it kind of bounced. And that says, okay, now you've got another pattern that you can monitor, and that is the H pattern. And that's going to be very important. So already made a peak B and held very nicely. If it makes a peak C, higher than 108.23, wasn't 108.54. If it goes to 108.55, that'll start a leg C, and that'll be good. But in the meantime, I still suggest that ExxonMobil is just digesting huge gains, sideways action, and we're going to. And I don't think in this phase it's going to make a new high into the 116s, 114s was a very strong resistance. Not just yet. I think it will at some point, but not just yet. All right. So questions came in. Could I look at pins? So pins is. Oh, I didn't even update it. Oh, I had it all updated. Then when I suddenly shut down by accident the other day, because there was I don't know, I can't remember, I think it was an update that, I hate those updates. I always say, don't update me, but sometimes it overrules it, updated me, so it just knocked it off and I lost those. It's somewhere there. My notations are there, but they aren't in front of me. So this is Pinterest, right? Pinterest Inc. All right. So this is trading at 24.40, up 23 cents. And the question came in yesterday. Could I look at it? What do I think? And I didn't have a chance to do it then. I'll do it right now. A, B, C, D. Yeah, all I'm doing is the alphabet, right? That's the Chapman methodology. That's the easiest part of it when you can do that. And then it pulls back, has a peak A, and then a gray peak A because it's under that E. But I like to just continue the notation and say this is an F, and this is a G / and we pick up the previous one. I'll go through the Chapman wave methodology in a moment, but in the meantime, let me just explain what I've done in the daily chart. No, I'm sorry, in the weekly chart. The first thing I would do is say, what am I looking at here that looks kind of obvious? And what I'm looking at is there's a potential arch formation. It's not there yet, but it's a potential arch formation. It has made essentially higher highs and higher lows. I like that. I also like to always open it up to see what am I really looking at. What I'm looking at is the most pathetic rally that's taken forever to go from from 16.14 on the week of the 27th of May to the most recent high, which is somewhere around 26. So percentage-wise, that is 10 points on a $16 stock. Is fantastic. No. You've got to look at it historically. This thing double-topped back in February of 2021 at 69.90, retested again in April of 2021 at 68.83. Is it not remarkable how many stocks, how many ETFs, how many indices? The S&P just went within pennies of its recent high with a double top and pull back. Look at this, within $1 back in 2021, and it goes from the 69 area down to the 16s. That is one heck of a, what is that, almost a 90% decline, or at least a 87% decline, something like that. So it's a fabulous, coming off bottoms, the percentage gains are fabulous, but not if you're looking at it historically. So I prefer sometimes not to look at things historically, but rather to say, what has it done for you recently? If you're looking at this weekly chart, it is just a steady higher highs and higher lows, but big moves. I mean, going from 26 down to 26 points, that's a 30% decline. So that it's nothing to sneeze at, and you can see the volatility. I chuckle because it looks like Bart Simpson's hairstyle. Look at these big spikes to the upside. And what I would look at is this: if this is peak, this is peak A, peak B, peak C. We've gone to a peak just over the 200-period moving average. And what I'd said is I would hold off right now. It's holding okay, but I need to just see how it holds over the next 2 days. The Dow is up 97, S&P is up 10. I'll be right back. Basil Chapman, Tiger Pictures. I'll finish the presentation of pins.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hello, so we're back. Can we look at Disney? Yes, S&P we will. So we're looking at pins, which is Pinterest. And, I always thought interest. I've never really looked at what they do. I always hear the name and I thought, I don't know about this chart. And then I look up, it says Discovery Engine for Recipes, Home Ideas, Style. I'm not even sure I'm correct. But I have to say that the interest is there that I can see as a socioeconomic aspect. There is money. I know that it looks like everybody's talking about how prices have skyrocketed. But if you look at things that are being bought, it seems to me that there's maybe a little bit of slowing, but... we were at the, just to get a little exercise, it was pretty cold on Sunday afternoon, so we went out to the Natick Mall. I guess it was last year at this time that we went as well, just as a kind of just to take a walk. And they've expanded. It's even bigger than it used to be. And it was, of course, I found parking. That's my gift my father gave me, and I've given to my children the gift of parking. Did get a parking place. And then what happened is we walked along, and every floor has, like, each way is traffic, people walking this way, that way. It was really busy. Now, I don't know about buying. Maybe they weren't buying. So anyway, I think that this is in play, but I would prefer to say rather buy towards the low, in this case at 24.55, somewhere between 23 and 21.50 is probably where it has a chance to go up. It's like a rectangle formation. I've drawn that in the daily, but in the weekly, it's more like an arch formation, but it keeps making... it keeps wanting to push above the 9-period moving average, and that's great. So I would do this for the person who was talking about it. I would say, why don't you start a position right here at 24.55? But it's really just a starter position. It's like instead of buying the portion that you are comfortable with right now, buy a much smaller portion, divide that maybe into half or maybe into two-thirds now and one-third that you would put in that 22 area, because I think it's actually in a sideways trading band. And as I said, I'd prefer to be buying the lower range and see if it gets to the 25 to 26 level, which is where the 200-period moving average is. And then you make a decision. Is this where it's this time it's going to, the technicals are strengthening, so it's going to break out? Or is this yet another time where it starts to pull back and it's just basically in a sideways trading band? So that's pins. A starter position, but a smaller starter position than normal. Maybe right here. I actually looked at it a little earlier when it was at 24. 24 is way better than 24.65, but it is not your full position. It's just getting your foot in the door in an area that, under the conditions that we're looking at right now, suggests that no matter what you read in the paper, I am in Wall Street Journal, whatever you're reading, I mean, just, it's not pleasant news. But the market is saying, under these conditions, I'm holding up damn well, really well. Look at this. This is the E-mini, just broke out. This is still a leg A in the 10-minute chart, and it's nicely above the 200-period exponential moving average now. So look, if you were following the particular rules that I like to talk about, look, if you got in, even if you missed it right on the bar that crossed positive, right now you've got yourself a positive 9-period moving average, and that started from the candle in the 1-minute chart at 9.57, where it was at 38 in the 38.30s, and here you are 30 points higher right now. So I said, watch what happens here. The other technicals were a little weak, but that 9-period moving average was just fabulous. And what have you got? You've got yourself an up arrow. That turns out to be a down arrow. You can go back and change that because that's the rule. It's not a crime. You go back and you just put in what it needs to be put in. That's the rule. So A, B, C. All right, so it's still moving very nicely high in the daily, in the 1-minute chart. All right, question came in. Funnily enough, I was going to do this, and Tommy spoke about it in his show, his 9 o'clock show, Market Kickoff. Folks, yeah, check it out. And also, he's a Rocket. Why did I suddenly forget the name? Rocket Equities. He does options as well. His newsletter. He really puts together fundamentals and technicals fabulously so that he has options within it. And that's really a nice way to trade because it gives you a chance of putting much less money to work for if you're correct, for a way better result. All right, let's get back to our story. We want to look at Disney. Disney right now. Here's the pattern I was talking about before, that dreaded H. We were looking at it in a UNG, you remember? So UNG hadn't yet taken out the left side low. Disney did, and the rule of thumb in this H pattern, the one that we were talking about a little earlier on, looks like this. I really want to find out if I can make a template of this pattern, the H pattern and the Y, the reverse Y pattern, and the cup and the arch, and make it like a transparency that I can just place over, and I can actually expand it. And you'll see just, it's unbelievable. Straight lines, cup and arch. That's what the market, and sometimes the cup is an inverted, it's like a V shape or an inverted V, but it's the same principle going from one point up and then back to that point? How does it test that? Or 1 point down, and then how does it test it when it comes back? So here we are. We're looking at Disney trading up $1.73 at 87.51. The rule of thumb that you can use is if in the big picture it's making lower lows and lower highs, you have to wait for a catalyst in a smaller time frame. The speedboat has to turn around to be able to move, or the rudder has to turn around. It takes a little while before it kicks in and you get the turn. Well, the rule of thumb in the dreaded H pattern, this is this H pattern that takes out the left side low, that within 2 bars, I sometimes say maybe 3, but I like to think of it as 2 bars. If it can go back above the left side low that you're looking at from the 9th of November, 86.28, that was what, 80, sorry. Yes, 86.28 was the low. It ran all the way to 100. I mean, that 14 points is a big move up. Anyway, it comes all the way back down in the H pattern, trough A, trough B, trough C, and that trough B gets negated because this becomes D. You have to go with the higher number of letters that you've gotten to gets precedence. And wait a minute, all of a sudden it's back at 87.51. And the MACD is still weak. The stochastic is trying to turn around from 10% on balance volume. It's trying to make a little V-shaped turnaround. 9 is still way under the 14. So this is a work in progress for Disney. And it says so far lower lows and lower highs is the theory. But in this H pattern, if it's able to break above a candle that or a 9-period moving average or something of importance above, that says it could not go to the most recent high that it failed. That was peak B minus on the 21st at 100.89. It means it can go up and then stall at maybe a moving average or a gap or a doji candle. And that says the candle I'm looking at also corresponds to 90.74 in the 9-period moving average. If Disney is able to break above that, 91.98 is the 14-period moving average. So 85 is absolutely imperative support to hold. But in this particular move, if I was looking at it in the 120-minute chart, I bet I'm seeing something good. Yeah, so the 120-minute chart, the stochastic was about 4% or 3, something like that. Now it's 5% turning up. On balance volumes turning up. Histogram in the MACD is improving, and that makes, it corresponds almost to the same thing. In this case, the pink 9-period moving average is 87.43 so far. It's already gone above that intraday. And then 88.94 is the 14-period moving average. So on a bounce, I think Disney has a bounce potential here. Just as I'm looking at the market, the reason why we got in today into added back to our just a little bit that we've taken off. We've added some of it back into the diamonds is because I think we're at a point where we should be seeing an oversold rally. That's my theory. So that's Disney trading at 163. We'll be right back. Dow's at 172.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi, folks. So we got a question, another question from the den. Could I look at a review SSRM? SSRM is SSR Mining Group. And what's interesting, I almost chose for my subscribers this morning a very low priced one, also kind of in the mining group, one that is not one of the very familiar names, but in this particular case, trading up 74 cents. SSRM is a symbol at 1556. I like this pattern very well. Remember that I'll do a couple of Chapman wave notations here. At this peak C that was made back in late November, you've got a Chapman wave falling axe formation. That says if it takes out the resistance, making lower highs and much lower lows, if it takes out the upper trend, declining trend line, then it should go quickly to each successively higher peak on the left until it tries to get to and above the left side high, in this case of the 2nd of December, of 15.98. Great candle today, kind of following the gold chart. And there is a very, I wanted to show you, remember Disney, I was talking about that Chapman wave dreaded H pattern, breaking down from a peak A or a B, going, testing the left side low, taking it out. If it does take it out, it has 2 bars. Sometimes I say 3, but I prefer 2 bars to go decisively above that left side low that it was looking at. Well, look, this is a successful one. But it could be partially successful in the sense that the low on the 1st of September at 1292, the very next session was nicely high, and it went all the way to a peak B at about 1450s, comes down, and it takes out, not by much, but it takes it out. It goes to 1286. Remember 1292. Yep, 1292 was the low. But then the very next session, oh, not only that, it took it out and it closed above. That's a good sign. And it says if the technicals at that particular point are rallying strongly, that's the only way you can get a kind of a buy signal that negates all the poor action, and you can have a very strong bounce. Well, lo and behold, you get the bounce. The rule of thumb should have been that it didn't go above the arch high, in this case, the high that was made at about 1467. Well, this single leg A went sharply higher. The 9-period crossed positive. The MACD was good. Stochastic briefly went above 80%. And here's your clue. The quicker the slow stochastic peels off and goes from over 80 to under 80, you got to be careful because it can drag the price down, which is exactly what it did. And that became an A- as it made another low with a dreaded H, successful one, went higher and pulls back. And then this candle right here, I'll circle it. Normally I don't like to put circles unless it's an instant restart or a Chapman wave stalk leg formation. I haven't seen one of those for a while. Okay, right there is your new low, and that low took out all the previous lows. It took out the low of 12.86. It went to 12.84 by 2 ticks. My eye picked it up just because I've done this so often. Now look what's happening. It's made this base. It's made this 3 times hit base really strong, and each time the technicals look, the stochastic was higher, each time it was improving, and now it's gone peak AB, pulls back, and under it has a gray peak AB, then an overlapping wave that goes to C. An overlapping wave says that you should get to a D. So I like this very much at 1557. My target is the 200-period moving average of 16.01. And what you really want to be looking at is 15.98 gets taken out for leg D. I like it. And then I think you have to be a little careful because it could hang around that 200-period moving average for a little while. And you can see in the weekly chart, the technicals were fantastic, but the price is really stalled. And right now, as we're speaking, it's the first time that the 9 has crossed positive. It's a weekly chart. I have to wait until Friday to confirm it. But at this particular point, you've got an L there that says 9 has gone over the 14. Hope that helps you. So, key support I need to talk about at this particular point. The whole thing will fail if in the next 3 days it suddenly pulls back and goes and starts to trade under 1522. It's at 1554 right now. Under 1552 says, you know what, it could stall a little longer, and that delays you're going to a leg D. You might even have another peak A, etc. underneath it. But in the meantime, it's acting really well. That takes me to the gold charts. Look, the gold chart right now, beautiful up move. It's up 26. But look at the GDX. What's going on? 200-period moving average is like a magnet. It can't get away from it. It keeps going above, then below, and then above. So this is really important. The technicals in the weekly chart are strengthening. They're looking pretty good. Monthly chart, I don't even want to talk about the monthly chart, but look at silver. Silver trading right now up $1.02 at 24.22, almost tackling the left side high. This is really good. Remember that our target in the weekly chart was we got another 3 weeks to go. But even before that time, I make these things up. When it goes to the bar symmetry, you can't do anything else. I don't want to talk about this high right here at $4 on the week of the 22nd of April at 26.81. When I'm right down here in the 21 area, I go step by step. So this is the candle I chose to use as a price point for our bar symmetry. On the week of the 29th of April, I made the low that was actually the low for a parallel mirror image bar. This is now your plumb line on the week of the 2nd of September with a low of 17.57. And look at this, the number of bars to the left side and the number of bars to the right side. So far, it's earlier than it should be. I've got until the week of the 13th of January to get to that high, which is 24.56. The high so far has been 24.39. So it could do that in the next few minutes. But that's what I'm looking at. So silver is still stronger of all of the out of the gold and silver. High grade copper trying to rally. It's up 0.02 at 3.80. The 200-period moving average for weeks has been the fulcrum above and below. It just keeps coming back and then pulling back, or just going over and then coming back. That's at 380 where it is right now. Looking at where I want. I want to look at the EUR USD. Look, here's the euro-dollar currency pair. Made a peak D, stalling at that level. Made a leg D. Have to call it a leg until the week is finished. A leg D under 1.0735. And right now it's at 1.0648. So it's very close to extending that. I didn't do a left side, right side price time match on this. I should have, but I kind of forgot. I can go, what I love to do is to bump up against the Grand Canyon wall on the left side, even though that would be the high. I try to go all the way to the back because that just says that definitely is. And then I try to find, if I can't do it visually exactly with the mirror image of price, I like to do it and choose either a particular candle or a particular icon that I'm seeing. And this particular instance is what it says in the weekly chart that the euro dollar should try to get to, and here we go, that's the same thing, the week of the 13th of January, it should try to get to 1.078. And right now it's at 1.064. So it has little time to go, and that would be it. Oh, and I also would have drawn in my Chapman wave inside wedge target repellent line. That's that line right there. It's hugging it right now. and then I would draw in a lopsided cup formation or a V-shaped formation from the level that I'm choosing, which would be right there, and then I'd take it. And there's the pattern. So Euro is acting really well to walk in the 9-period moving average. I'll be right back to the final segment. Dow's up 148. Let's just quickly look at our E-mini chart right there.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, so let me show you something. In the Chapman Wave methodology, I always like to say we try to identify the lowest low bar and then count each successively higher peak, alphabetized sequentially, uppercase on the way up, lowercase on the way down, A through G. But it's at that fourth highest peak, D, that other things can happen. Your objective is to get from a buy signal to a buy mode, and we'll see exactly what happened here. We went from the low that was made right at about 950 at the 38.18, 38.20 area, and then boom, starts around and goes to peak A, B, C, D, E, pulls back with a little tiny doji candle, holds the 14-period moving average, makes the cup formation. Remember, we were talking about that, and how long can a 1-minute chart test to the exact quarter point its highs, and then breaks out and goes peak A, B, C, and another D by 25. No, that wasn't 25 cents. That was 75 cents. And remember, a rectangle is in fact one of the movements that we always look at. I always talk about the rectangle as a really important thing. You get the large rectangle in the Chapman Wave methodology. Let me show you right here, and the narrow one. And a narrow rectangle, a long, narrow rectangle, like here, can last a lot longer than your patience. So we're going to be watching this because it's already about 20, it's about 40 minutes, and it's just been in this trading range between a very narrow trading range between 38, say 67 and 38.56. That's a really unusual thing, and it can last. We saw that last week on Thursday. We saw three long trading ranges in a very narrow range. So I'm watching this closely, but I love this. This is a leg A to the upside in the 10-minute chart, and it suggests very strongly with the stochastic at 93 that over the period of the next hour or two, we should go to a leg B, pull back, then a leg C higher, pull back, and then a leg D, and that big D is going to be key. But if we start to take out 38.52 and we're at 38.63, you've got to be real careful. So I'm watching this closely. Have a wonderful rest of the day. Stay tuned. You've got Steve Rhodes, wonderful show coming up. Steve Rhodes. Then you've got Thinkorswim. You've got I don't know if David's here. I don't think David's here. Then you've got